All right, so let's dive into this.
Okay.
Wall Street's version of holiday cheer, I guess you could call it.
Yeah.
We're going to be looking at a recent Reuters article that breaks down
Right.
what happened in the markets on December 23rd.
Interesting.
Now, you might be thinking, who cares? It's practically Christmas.
Right.
But here's the thing, even when most people are, winding down for the holiday,
Yeah.
the markets, they keep chugging along.
Yeah, they don't stop for anything.
And this particular day had some interesting
Right.
twists and turns.
What's fascinating is that December 23rd was a holiday-thinned trading day,
Okay.
meaning, fewer investors were buying and selling.
So it's like a good
So any movements we see are amplified.
skeleton crew, kind of?
Yeah, exactly. It's like someone shouting in a quiet library.
Oh.
It really catches your attention.
So it's like the market whispers become roars.
Exactly. And what were those roars?
Okay.
Well, the Magnificent Seven,
Uh-huh.
those tech giants
Mhm.
like Meta, NVIDIA,
Mhm.
and Tesla, they all saw gains.
Okay.
Some between a solid 2.3 to 3.7%. Now, on a regular day, those percentages might not seem huge,
Right.
but with fewer people trading these gains, pushed both the NASDAQ and the Dow Jones Industrial Average
Uh-huh.
up for the third day in a row.
Okay, so even with less action, the Magnificent Seven still managed to make a splash.
He did.
I've also heard whispers of something called a Santa Claus rally.
Okay.
Is that just a Wall Street myth, or is there something to it?
It's a bit of both, actually.
Okay.
The Santa Claus rally refers to the historical trend of stock market gains
Oh.
during the last 5 trading days of the year and the first 2 of the next.
Oh, okay.
Since 1969, the S&P 500 has seen an average gain of 1.3% during this period.
Yeah.
Some believe it's driven by year-end portfolio adjustments by
Oh.
institutional investors, while others attribute it to a general sense of optimism around the holidays.
So a mix of hard-nosed financial strategy and maybe a dash of holiday spirit.
Yeah, you could say that.
But haven't things been a bit rocky lately? Didn't the Fed just kind of throw everyone a curveball?
They did. The Fed recently signaled a potential slowdown in their rate cuts,
Right.
which spooked some investors. Remember that market dip earlier this month?
Yeah.
That was partly fueled by those jitters.
So how does that square with this recent upward trend?
Yeah.
Especially with these tech giants leading the charge.
Right.
Are investors just feeling brave, or is something else at play?
It's a bit of a puzzle, isn't it?
Yeah.
Some analysts, like Chris Zaccarelli from Northlight Asset Management, suggest
Okay.
investors might be holding onto their stocks to avoid selling at a loss before the year ends. You see, selling at a loss can impact your taxes.
Right.
So some investors might be waiting for a better time to sell.
So it's not just about chasing those holiday gains.
Right?
There's a strategic tax angle, too. I guess even on Wall Street, nobody wants a lump of coal from the IRS.
Precisely. But here's another interesting point.
Okay.
It wasn't just the Magnificent Seven that saw gains. 8 of the 11 S&P sectors finished higher on December 23rd,
Wow.
with communication services leading the pack.
Interesting.
That suggests the positive momentum wasn't just limited to tech. There's broader market strength at play.
So maybe those whispers of a Santa Claus rally aren't so far-fetched after all.
It's certainly possible, but let's not forget the market loves to keep us guessing.
That's true.
Now, if you're curious about some of the specific company news that made waves that day,
Oh, absolutely. What caught your eye?
well, there was this legal battle brewing between Qualcomm and ARM Holdings that reached a climax.
Okay.
It all boils down to who gets to use what in the world of processors, the tiny brains that power our phones and computers.
Okay, so it's a tech showdown. Tell me more. I always find these intellectual property battles fascinating. It's like a real-life David and Goliath story, but with billions of dollars at stake.
Exactly. Qualcomm designs and manufactures processors, while ARM Holdings licenses the fundamental blueprints for these processors to other companies, including Qualcomm. The court battle centered around whether Qualcomm overstepped their licensing agreement with certain products.
So who won this round of the processor wars?
The jury sided with Qualcomm,
Okay.
sending their shares soaring by 3.5%, while ARM Holdings took a hit, their shares falling by 4%.
Wow, that's a significant swing. Sounds like a decisive victory for Qualcomm, but I'm guessing ARM isn't going down without a fight.
You're absolutely right. ARM is already pushing for a new trial, so this legal saga might drag on, adding a layer of uncertainty for investors in both companies.
It's like a tech thriller with a cliffhanger ending. Now, on a completely different note, I heard Walmart got tangled up with some accusations from the U.S. consumer finance watchdog. What was that all about?
This one's a bit less about cutting-edge technology and more about old-fashioned allegations of corporate greed, unfortunately.
Yeah.
The watchdog claims that Walmart, along with their partner Branch Messenger, pushed delivery drivers into using accounts riddled with excessive fees, costing them millions.
Ouch, that doesn't sound good. So it's like squeezing those who are already working hard to make ends meet.
That's the allegation. Walmart, of course, has denied any wrongdoing. But these accusations have the potential to tarnish their reputation and make investors jittery. Unsurprisingly, their share price dipped by 2%.
It's a reminder that even retail giants aren't immune to market turbulence, especially when there are questions about their ethical practices. But hey, let's end the segment on a positive note. Eli Lilly had a pretty good day, right?
They did. Eli Lilly got a big thumbs up from the FDA. Their weight loss drug, Zepbound, received approval for treating obstructive sleep apnea. This is a major win for them, sending their shares up by a healthy 3.7%.
So a weight loss drug is now being used for sleep apnea. That's fascinating.
Yeah,
It seems like pharmaceutical companies are always looking for new applications for their existing drugs. It's like finding hidden treasures in your own backyard.
exactly. It's all about expanding their reach and tapping into new markets. And in this case, it highlights the growing connection between obesity and sleep apnea.
Right, as obesity rates rise, so do sleep apnea cases. That's a sobering thought, but it also means there's a growing demand for effective treatments.
And that's where investment opportunities come in. Companies that can address these emerging health challenges are poised for significant growth.
It's a reminder that healthcare trends and market opportunities are often intertwined. But this good news for Eli Lilly wasn't so great for other companies, right?
You're sharp. The companies that manufacture traditional sleep apnea devices like ResMed and Inspire Medical saw their shares take a hit because they're now facing increased competition from pharmaceutical solutions like Zepbound.
It's like a game of chess. One company's move can create a ripple effect across the entire board.
Speaking of moves, what about Nordstrom? They made some big headlines, didn't they?
We did.
The Nordstrom family, along with Mexican retailer El Puerto de Liverpool, decided to take the company private.
Interesting. So they're stepping away from the spotlight of the public market. Is this a sign of trouble, or are they just changing their strategy?
It's more of a strategic shift. Going private shields companies from the intense scrutiny of the public market, allowing them to focus on long-term goals without the pressure of quarterly earnings reports and shareholder expectations.
So they're trading short-term volatility for long-term flexibility. It's like choosing to sail in calmer waters, even if it means going a bit off the beaten path.
That's a great analogy. This move gives Nordstrom the freedom to maneuver without constantly worrying about pleasing Wall Street.
But didn't this decision cause their shares to dip?
Yes, they fell by 1.5%.
Yeah.
This is fairly common when companies announce plans to go private. Investors often react with a bit of caution until the details of the deal are fully revealed.
It's like a temporary fog has descended and everyone's waiting for it to clear to see the full landscape. Well, it seems even on a holiday-shortened trading day, there's enough drama and intrigue to rival a Wall Street thriller.
Absolutely, and we've only just scratched the surface. What stands out to you from everything we've discussed?
I'm struck by the sheer interconnectedness of it all. We've got the Fed's actions sending ripples through the market tech giants, battling it out in court retail giants, facing ethical dilemmas and healthcare innovations, creating new winners and losers.
It's like a giant web, and each thread is connected. It's a constant reminder that understanding finance isn't just about numbers. It's about understanding the stories behind those numbers, the human decisions that shape market trends.
And that's what makes these deep dives so engaging. We get to peel back the layers and explore the forces that drive the market, both the rational and the emotional.
It certainly is. And even on a seemingly quiet day like December 23rd, we see those forces at play. Remember how we talked about the possibility of a Santa Claus rally?
Yeah.
Well, this brings us to another interesting concept. Holiday-themed trading can actually magnify the impact of those year-end portfolio adjustments,
Oh, okay.
potentially contributing to the rally's strength.
So like we said earlier, it's like those market whispers becoming roars. But what I find really intriguing is this idea that investor psychology plays a role too. Is there any evidence to support that, or is it just Wall Street folklore?
There's actually some fascinating research in behavioral economics that suggests our mood can influence our financial decisions. Studies have shown that people tend to be more optimistic and risk-tolerant when they're feeling happy,
Interesting.
which might explain why we often see market upticks around holidays.
So it's not just about cold, hard calculations. There's an element of human emotion baked into the market's behavior. I guess that makes sense. We all know how a good mood can make us feel more generous. Maybe it extends to our investment decisions, too.
Precisely. And that's what makes the market so unpredictable and frankly so captivating. It's a blend of data strategy and human psychology all swirling together.
It's like a financial symphony with all these different instruments playing their part. So as we wrap up our deep dive into this holiday trading session, what are some key takeaways you'd like to leave our listener with?
First, I'd say don't underestimate the power of seemingly quiet days. Even when trading volume is low, significant shifts can occur, especially when those big players start making their moves.
Right, like those subtle ripples that can eventually turn into tidal waves.
Exactly. And second, remember that the market is a reflection of human behavior as much as it is a reflection of economic data. Understanding those psychological drivers can give you a valuable edge in navigating this complex world.
It's like having a secret decoder ring to decipher those hidden messages in the market's movements.
That's a great way to put it.
Uh-huh.
And finally, I'd say stay curious, stay informed, and don't be afraid to challenge conventional wisdom. The market is constantly evolving, and those who are willing to ask questions and explore new perspectives are often the ones who come out ahead.
Well said. And that's what we aim to do with these deep dives, to equip our listeners with the knowledge and insights they need to make sense of the ever-changing financial landscape. So even though we're wrapping up this episode, the conversation doesn't end here. Keep exploring, keep learning, and we'll see you back here soon for another deep dive into the fascinating world of finance.